Welcome to Markets Now. I'm Michelle Rook along with Brad Koima with Koima Varlick. We're seeing higher prices in grains and hogs, lower in the cattle market this morning. And Brad, thanks for joining us. Let's talk about this cattle market. Obviously, we're seeing a little bit of a pullback today because of higher corn, but boy, that market has certainly been very resilient, especially on the cash side of things, hasn't it?
It sure has, Michelle. Thanks for having me on. Resilient was exactly the word I was going to use as well. Look at the calendar, right? This is the time of year where, I probably said it on your show too. Once you get to Father's Day, usually we slow down and yada yada. Well, that's been in our rearview mirror for quite a while already, and the boxes have started to slip, and I think they'll probably go some lower. But the pie is this big. Maybe it's the producer's turn to get a bigger slice here. The Packers had his whole pie of the crust and everything else with it here for so long. And it's about leverage, in my opinion, and that's why the market has been so resilient. It would seem to me and others that there's a few less captive supply cattle, and that makes a difference. But even more important than that right now, I believe, is the fact that the North especially, and good friend of mine always used to say the beginning and the end of all the markets start in Iowa. Okay, you can believe that or not, but I do. And when we're this current in the calf-fed, farm-fed area, it just makes all the difference in the world. There would be some years here where show list would be, my brother sells fat cattle. He'd have a show list of 8,000-10,000, and he's got less than 1,000. I mean, we're pulled forward to a point where I believe that we are more current here than we were in 2014 in the middle of July, and that's saying something because we were super, super current then.
Right. So what are your expectations for cash this week? The North actually pulled the weighted average up last week on the 5-area steer. And so will we see higher prices again this week? Because cash appreciated all the way into the end of the week, didn't it?
Yeah. It sure did. Late Friday, even, after the market closed, there was some hype stuff that got quoted out of Nebraska. You ask a great question. Based on supply here, you would say, well, Brad's going to say higher. Based on the willingness of the producers to sell cattle, you got to remember, a lot of the guys here feed calves only and not yearlings, and they haven't got in on this big market yet. And they're going like, boy, if I could get 183.45 steady, these cattle might make $300 a head. I need that, after several years of struggles. So, I think I'm going to call the market steady because I think that anybody that is going to be resistant to taking lower bids, but I think there's going to be a willingness on the part of the seller also to say, hey, I'm going to stay current. I'm going to sell it. Steady money is a big price, and it is the middle of July after all. So I'm going to call it steady-ish. But again, if it isn't, it might be that we don't trade. If they try to buy them lower and we're this current, the guys just might say, yeah, you know what, let's see what happens next week. I'm going to stay steady.
Okay, they'll dig in their heels here. What about the fund roll? We got to get through that first, though, right? On the
and it's
future
big.
side.
It's really big this time because the funds got themselves long coming into the week, 112,000. So yesterday, August open interest drops 9,000, a little more, and we were still higher. We did lose maybe 30, 40 cents on the spreads, and that's all we're losing today. But that's kind of impressive, actually. I thought maybe when we got into the teeth of the roll, it's day 2 of the Goldman today, and that'll last all week. I would not be surprised, nor should you, that the August cattle are a little weaker relative to the back months. So far, it's been impressive that they haven't had any more trouble. A bit of a discount to cash, but not like it was. 177 future here this morning, and 178 was basically the market in Kansas last week. So you don't really. I can easily see cash being steady better, and the futures breaking just a little bit here for a moment because of the fund roll.
Okay, let's talk about hogs, because if you look at a chart pattern, man, it's been almost a straight up shot here from the contract lows, in part pushed by the cash market. But are we getting a sense that cash market is about run its course here yet?
Cash market, yes. Pork product market, emphatically yes, is what I'm being told.
Okay.
And that's, backlash of Prop 12. And I don't pretend to be, every market's difficult to trade. Hogs are especially so for me. But I think the confusion over what exactly could happen with pork product and storage and procurement and hoarding, if you want to call it that, to me still leaves a vulnerability to this meat thing someone that doesn't need to buy anything now for a month or so because he bought it all ahead because he wasn't sure what Prop 12 was going to do to him. And I think that that's where we're at in the meat market. Now, chart wise, you got an issue too with the market and a reason to sell it. That big outside day reversal down, then we gap lower. Yesterday, we rallied enough to fill just that gap, roll lower. We're higher now with an inside day, which technically means very little. But I'd say you've got a fundamental and a technical reason to be a little concerned here in the hogs for a moment.
Okay, August, that was the day that we got above the $100 mark, made new highs for the move, and then we ended lower, right?
Correct. Yes, sir.
Okay, so you're saying that's maybe some topping action from a technical standpoint.
That's how I look at it, Michelle. Yes.
Okay. All right, let's move over to the grain trade. Soybeans leading the charge here. Obviously, we're anticipating some lower ending stocks in the WASDE tomorrow just because of the lower 4 million less acres. But what are you thinking about corn? The big debate here is USDA going to lower yield? And if they don't, what does this ending stocks number looks like?
Well, it's going to be an egg throwing contest, of course, if they don't lower the yield. But
yeah,
I guess I would caution. I certainly don't think it's 181.5, and I don't know that anybody that really does. Now, having said that, it's up to the USDA to decide. And I would remind people that, in my experience, at least, the USDA has been slow to react during the June report, or for the June report, the July report for the month of June, and also any reaction that the USDA typically makes is they move like a snail. So the average trade guess has got us dropping almost 5.5 bushels yield from the last time. And why I wouldn't dispute at all that we could easily be 175 or 176 when it's all said and done. I wonder if it wouldn't be more typical of the USDA to edge your way to it 1 or 2 or 3% at a time instead of this big leap. So I'm a little worried about the potential of a negative reaction. The other side of it is, of course, what are they going to do with the demand side? I'm not the nerd on the numbers on the corn like I am on the cattle, but I don't think you have to be to see that the export number looks to be inflated and feed and residual looks to be inflated. When you've got 3.5% less cattle, they're going to eat less corn. I don't know. So to me, there's a little bit of risk tomorrow walking into the deal, but there always is, and these reports are a crapshoot here for most of us.
So my other question, though, is if soybeans are the leader and they're going up, does corn have to follow, or do we get the markets going in opposite directions?
Frankly, I can't imagine the old guy in the room here is going to say that they can get a lot crazier than they are from here, Michelle. I mean, my goodness. To think that you can take, to me, the corn fundamentals, I mean, people are going to hate this. But the corn fundamentals to me look like you could lose 50 to 75 cents if it keeps raining, which I don't know if it's going to or not. But and then you're going to still tamp on this whole deal of the short acres on the beans, if you can believe it, and take beans to 16 or 17 like some people are suggesting. I'm not sure. I wonder if corn is more of an anchor and keeps the beans from going where they could go.
Okay.
But August is still the month that you create bean yield, and we're not there yet.
All right. Thanks for joining us. Brad Koima with Koima Bar. Like that is Markets Now.